Just a moment. So make sure you have your pen, your notebook, and somewhere where you can, a calculator as well is very important, especially for financial accounting. AI, Peter, you're not getting the volume. Please get off and come back. You're not getting the volume because you didn't click on volume. So get off and then come back, join again. Yeah, get off and come back again. So thank you so much to everyone. It's a pleasure to have you here for our financial accounting revision class. Like earlier indicated, we are looking at question 3 of March 2021. Yes. So question 3 of March 2021 is what we are looking at today. And it's to do with correction of errors. Now, before we get down into the actual question, I just want to give you a brief. Now, why do we have errors when somebody speaks of errors? Now, continuously as accountants, of course, we are humans, and every day you can make an error, you can make a mistake. You get it, huh? So the correction of errors, why it is important for us as accountants is after all these mistakes have been made, how do we exactly correct these errors? Now, you get to realize that there are errors. Errors are in 2 categories. We have errors that affect the trial balance. We have errors that affect the trial balance. And then we also have errors. We have errors that don't affect the trial balance. That don't affect the trial balance. Now, errors that affect the trial balance. Errors that affect the trial balance means that when you have your trial balance, the trial balance will not balance. When you have your trial balance, the trial balance will not balance. Now, those that are fresh to accounting, you know very well that your trial balance, our trial balance looks like this. Our trial balance has, could have account detail or account, or maybe detail, and it could have a debit, and could also have a credit. So that is what happens with our trial balance. Also, let me just try to give it a shape. So you'll have different accounts. For example, cash, you have maybe bank, maybe you have sales, and etc. And these will have different amounts. Maybe this is 1 million. This could be maybe 200,000. This could be maybe, let's say, let me give this 2 million for the first demonstration. This was 1 million. Okay. So what would happen here, if this is my trial balance, the trial balance usually has a total at the bottom. You get it, huh? The trial balance usually has a total at the bottom. So if this is my trial balance, and for example, these are my respective totals, on the debit and credit. Yes, maybe this can be like 2 million, like that. So if this is my trial balance and this is my debit and then credit, at the end of the day, it would mean that my trial balance is not balancing, because when you look at my values down at the bottom, as you can see, these values, they are not balancing. This is a trial balance, and from its name, it should balance. So because it doesn't balance, it would mean that I need to introduce what I'll regard as a suspense account. Now, before even I introduce the suspense account, it's good for me to understand that the errors that I would have made in this case are errors that affect my trial balance. And that is why the trial balance is not balancing. I'm just trying to assume that these are only what I have as my assets and maybe sales and to do with that. I don't have any other accounts that I've left out. You get it, huh? Yeah. And even if I've left out an account, that's also part of an error. It's an error of omission as well. So if this is my trial balance and this is what I all have, it would mean that if my debit is not matching my credit, then I'll introduce a suspense account. Now, a suspense account is one of those important accounts that we look at when we are correcting errors. So a suspense account is introduced on the side that is less than the other. So for example, my suspense account here will be 800,000. So once I put my suspense account, it means that my total on the debit will equal to that on the credit. Now, what this is meaning here is that I have introduced a suspense account. Now, a suspense account is a temporary account that is introduced in the trial balance to take care of any possible errors that affect the trial balance. You get it? So that's why I've introduced this suspense account of worthy 800,000. Now, so it means that there's some kind of errors that are giving us a net of 800,000 of debit that is lacking. So this is one case. Now, this happens for errors that affect the trial balance. So the errors, if such errors are made, the trial balance will not balance. So some of those errors that you could think about that could affect our trial balance could be we can have arithmetic errors, And what happens with arithmetic errors, you could have maybe your account, maybe if it was a cash account, maybe when you are balancing off your cash account, instead of adding maybe 200,000 to maybe your 800,000, maybe you added another figure. So there's an arithmetic error in that capacity. You get it, eh? So arithmetic errors in the different accounts could bring that. You get it? Yeah. Of course, even arithmetic errors within the trial balance itself could also cause that as well, because you usually use your calculator to add that up. So it may also cause that. Then we can also have error of single entry. We can have an error of single entry. Now, you will know very well that in accounting, we have what we call the double entry principle. For every debit, there should be a corresponding credit. Now, if that is the case, it would mean that if you only, for example, maybe debit cash and you don't credit your sales, it means that that would affect the trial balance. The trial balance will not balance. Single entries are common with sole proprietors, and that's why we have another topic called we have another topic that tries to look at single entry transactions and how we can be able to prepare financial statements from these single entry transactions. You get it, huh? Yeah, so we can have arithmetic errors, we can have L of single entry. What else can you think about? Those that are following, in case you're following this from here, please type in the chat box what kind of errors that you could think about that you've revised and you could think about that could affect our trial balance. You get it, huh? Yeah. So now that could be one case of such errors. We shall learn more about the errors even as we go through our question. So we can have another case where this is maybe 1.8. This can be 1.8. Now, in this case, our trial balance has balanced. Our trial balance has balanced. We have 2 million here and 2 million here. Now, us having our trial balance balanced does not automatically mean we have we have no error that has been made, because there are some errors that don't affect the trial balance. There are some errors that don't affect the trial balance. So those errors could be in there, but they cannot be detected by the trial balance. But that does not mean that since the trial balance has balanced, we ignore those errors. And that's why we have here, and I will just give you also just a few examples. We could have things like L of principal. And an example of L of principal is when you mix transactions of, for example, if it's a purchase of, you're purchasing a motor vehicle. You're purchasing a motor vehicle, maybe for cash. And instead of debiting, because when you purchase a motor vehicle, you should debit your motor vehicle account. Vehicle account. Should debit your motor vehicle account with, let's say, 1 million. Maybe it's 1 million. And then you should credit the mode of payment. Should credit the mode of payment. For example, if it's cash, you credit with 1 million. Now, if it's an L of principal, instead of doing this, you could do this. Just try to copy this. Now, instead of debiting motor vehicle, you can go ahead to debit your purchases. You can go ahead to debit your purchases. Now, I'm looking at this vehicle as an asset to the business. And you know the value that every time we debit purchases, here we're debiting inventory. And we would only debit a purchase of a motor vehicle under purchases if at all this business deals in motor vehicles, buys and sells, maybe like a bond. But if this is a business whose assets are motor vehicles and does not deal in resale motor vehicles, then instead of debiting this, we have done this. Now, this is an error that will not be detected by the trial balance. So at the end of the day, you would not need the suspense account to correct this, but this is an error that you need to correct as well. So that is very important for us to understand. Now, we can also have error of commission. Yes, error of commission. Now, what happens with error of commission? It is not any different from this. Now, with error of commission, you could have different, I'll use an example. You can have maybe different customers. You can have different customers, and I'll use 2 customers here. You can have a customer called Johnny, and you can have another customer called maybe Johnson. So you have two customers, Johnny and Johnson. Now, when you sell goods to Johnny, instead of posting transactions onto John, maybe sold to John on credit. So John, in this case, John is a debtor in your books, or is an account receivable. So instead of posting goods, this amount of money on John's account, you go ahead to post it on Johnson's account. So for example, if you're selling goods to Johnny on credit, definitely would debit Johnny's account. And we're debiting Johnny's account as an account receivable, or debtor. Because, you know, every time we sell goods on credit, we debit the accounts receivable. Some people have just accounts receivable, but businesses that deal with several customers have these as individual customer accounts. So maybe we sold these goods worth 200,000. If these goods were worth 200,000. So if we are crediting our sales, since we are selling to the tune of 200,000, it would mean that instead of doing this, I'm trying to demonstrate the error. This is what we did. We came to the accounts, and instead of choosing John's account, we chose Johnson's account. You get it. So at the end of the day, such an error will not be detected by the trial balance, because your trial balance will definitely have the same totals, just as we are seeing here, to have 2 million, and it also have 2 million. So it will not totally be detected by the trial balance. You get it. So we can have these two as examples, maybe just to add you. It could be an error of omission. An error of omission could also be part of that. Now, what happens with error of omission? What would happen with error of omission is you totally miss out a transaction. For example, you could have purchased maybe goods on credit from maybe ABC Limited, worth maybe 2 million shillings. You would have purchased goods worth 2 million shillings from ABC Limited on credit. Now, you totally leave out this invoice. Maybe you misplaced it and you forgot about it, or whatever might have happened along the way. So as long as you missed out such an invoice, that would be an error of omission. So it will not be detected by the trial balance. So there are several of those, and I would ask you to go on to research more about them. But for matters of this class, it's a revision class. I will not go so much in detail. In case you want to get more details and different examples, then you join the detailed class where we go in all these in detail. Okay. So now with that understanding, it is only errors that affect the trial balance that we bring in the suspense account, like I earlier indicated. Errors that where we don't that don't affect the trial balance would definitely not have a suspense account coming in. Now, this suspense account is a temporary account. And when we are correcting the errors, one of the things that we are doing is to make sure our suspense account is zero, is to nil. That is one of the things that we try to make sure that we are doing. You get it? So it's important for us to have that in mind. Now, I want to go back to our question now. Now, going back to our question is saying the accounts assistant of Excel Limited prepared the financial statements despite the existence of a suspense account balance of 40,150,000. The statement of financial position as at 31st June 2020 is provided below. So they have given us the statement of financial position. So we have assets, we have inventory of that value, we have plant and equipment, we have buildings, we have cash and bank, we have land, we have trade receivables, we have suspense account. Now they have given us a suspense account here, and it is under our assets. You get it? Now that alone is an indication to you. If they have included this suspense account under your assets, it means that this suspense account has a debit balance. It means that this suspense account has a debit balance. So when you're going to open up your suspense account, your balance brought down will be on the debit side because it's been included under our assets. Now, also, they have given us different, they have also gone ahead to give us liabilities and so on. And then on further analysis, they have also given us different errors, and they want us to show journal entries for the above. Now, it's good for us to note that ORIs, they can bring a trial balance rather than bringing this. Instead of bringing this, they can bring a trial balance. You get it? And the trial balance is one of the most common ones. But alternatively, they can set that question by bringing a trial balance. And the principle still remains the same. Basically, what they are trying to do is they are trying to test your understanding of some of these errors. Sometimes even instead of bringing instead of bringing, let's say, a trial balance, they can actually bring this question as in the narrations. So they can give you, they can actually give you the question in narration. So they can bring a narration with the different details. So it's important for us to have that in mind, that the question can actually be set in different ways. But the principle is the same, because at the end of the day, all you need to know is to understand how to go about the question. You get it? It's to understand how to go about the question. Yeah. So I was just trying to see if I can find a question that has could have a trial balance. In case I come across any, I'll be able to share that with you so you can see how other questions can be set. Or after the class, we can see how that can be shared with you as well. Yeah. So I'll beg to proceed with the question today. So sometimes I said they can say maybe they can give you this and they say maybe they had a debit suspense account of this value. Alternatively, they can also say this was the debit amount and this was the credit amount, and then you find out which side had the deficiency. Now, the side that has a deficiency is the side that would definitely have the suspense account. You get it? Yeah, so it's good for you to have that in mind, that they can set it in different ways, but the principle is the same. The side that has the deficiency in the trial balance is the side that has a suspense account. In case they bring it as a statement of financial position like this one, yours is to be interested, where is the suspense account? Because we know very well that all assets have a normal debit balance. All assets have a normal debit balance. So if they have included it in assets, then it means our suspense account also has a normal debit balance. Yeah. Now, as we proceed here, we are now going to look at the different errors that they have actually given us. Now, before you proceed to even look through the errors, of course, for you to manage your time, it's good for you to understand what will you be preparing at the end of the day. What is the examiner interested in? You get it? So for example, here they have asked you to prepare a suspense account, which they have given only 2 marks. And they have asked you to show the journal entries to correct the above errors. So yours should be to first go and of course, first draw up your journal entries. You first go up and draw up your journal entries to make sure that you have that. So I'll just try to go to my Excel. So I'll try to give this a title. This is Excel Limited. This is Excel Limited. Okay. Yeah, I'll call this General Journal. I'll call this a General Journal for Excel Limited. So I have my detail here. I have my debit. I'll have my credit. Okay. Yeah, like that. So back to my question. Reason why I want to do this is because I want to make sure that whatever I post here, I can also post. I also have my suspense account. It's also good for you to draw up your suspense account. Forgive me, I'm using my Excel, but you'll not struggle like me since you'll be drawing this using your calculator. Okay. So remember, our question is asking us to draw up the suspense account as well. Okay. Make sure you mute your microphone. So I have my suspense account as well right there. So I usually draw this earlier on because I want whatever I post here, I should be able to post immediately there so I can manage time. Yeah. So I'll go back to my question. Make sure you have this question so you don't have to struggle. I already shared the question. I can reshare this. I can reshare this question, the paper I'm using. But you can also find this on the iSPAR website. Yeah, so I've shared the question. We are looking at question 3. So the first part is telling us the purchases for the period were undercast by 3 million. Now, if purchases for the period were undercast by 3 million, what would come to your mind? Definitely, it would mean that in transferring the value to the trial balance, the purchases value was also undercast by 3 million. Now, such a transaction, it's in its own, would affect the trial balance. Now, I beg to clarify something small here. Here, they have just told us the purchases for the period. But sometimes they can say transactions maybe from the purchases journal. So if transactions are still at the purchases journal, then you know that they go into different accounts. Purchases journal records purchases on credit. So you have to think through about a transaction onto the purchases account, as well as transactions in the accounts payables account. Now, if they're just saying that the purchases for the period were undercast by that, it means that everything on the other side was done rightly. And this is now in the purchases account. Now, yours, even to basically understand more what you're going to do with each error, is to understand what kind of error is this. You get it. So if they're saying purchases for the period were undercast by 3 million, this is kind of an arithmetic error. By undercast is like you're adding. So you added by less worthy 3 million. So we said the arithmetic errors are errors that definitely affect the trial balance. So when we are making the journal entry here, somebody says share the question on WhatsApp, please. It's hard for me right now to share the question right there. Yeah, but you can download it and it will go to your phone from there. Okay. So the journal entry here for us is, since we've said that this affects our trial balance, it means that this 3 million, for us to correct this error, since it was undercast, we have to increase it by 3 million. So we have to increase our purchases account by the 3 million. And since this transaction also affects the trial balance, means that it is also part of the suspense account here. So we also have to write off the suspense component that is within this value. So we're going to have two accounts. We're going to have the suspense account, and then we are also going to have the purchases account. So it's important for us to have that in mind. So just like the way we said here, that transactions, errors that affect the trial balance, all of them are corrected by the suspense account. They are corrected by suspense account. So you realize that any errors that don't affect the trial balance will definitely not have a suspense account in them when we are correcting. So when I come here, my account detail, if this is my first error that I'm correcting, I have my purchases that were undercast. I have my purchases account. And then I have my suspense account. So my what I'm going to do, I'm debiting my purchases by 3 million. And I'm also crediting my suspense by 3 million. Somebody will ask, why are you debiting your purchases? I'm debiting my purchases because purchases have a normal debit balance. If the error that I've been given, they're telling me that they were undercast by 3 million, it means I have to increase them. It means I have to increase my purchases. So as I increase my purchases, I'll complete my double entry by crediting my suspense account. Somebody would also ask, why are we crediting the suspense account? Why are we not debiting the suspense account? I want just to give you a demonstration here. Now, if this is my trial balance here, if this is my trial balance, and let's say I had my purchases, and let's say I had my purchases here. I'm just trying to give you an explanation. If I had my purchases and maybe I'll just try to change this value to 1 million. And let's say my purchases are 800,000. So instead of, purchases have a normal debit balance. So this is where they would appear. So instead of these purchases being 800,000, I might have taken 600,000, sorry. I might have taken 600,000. Now, since I have taken 600,000 for these purchases, definitely at the end of the day, there would be a value of suspense. There will be a value of suspense. There will be a value of suspense of 200,000. That is covering up for the undercast. And that value will definitely be on the debit side of our trial balance. And that value will definitely be on the debit side of our trial balance because the undercast has definitely brought a deficiency on the debit side of how much? Of 200,000. So for me to have the two sides balance is why I introduce a suspense of this value. Now, of course, in most cases, this suspense that you find here will be a cumulative of different errors, but it's good for you to just have it in mind and understand that this error, each error is bringing a value, and each error influences either the suspense values on the debit side or on the credit side. So for this case, for case of purchases, a suspense will be on this side. Now, when we are correcting errors, ours is to make sure that we are doing away with the suspense account. So we are clearing the suspense account to 0, because when you finish your errors, correction of your errors, your suspense account should be definitely at 0. So what will happen in this case is that since the suspense value is on the debit side, we credit it so that we clear it. If you're working with tier accounts, you know very well that if an account is reducing, you do the opposite side thing. So if this value is 200 and we introduced it just to make sure it covers up for the undercast on, let's say, these purchases, it means that if we want to clear this suspense account, because what we are doing, we are debiting our purchases by 200,000 to make sure that it adds up. So we no longer need the suspense because in this case, it has already come through. So for us to clear the suspense, we shall definitely credit it. And that is why in this question, as we are debiting our purchases with 3 million to cater for the undercast, we are crediting the suspense account so that we write it off. And that's how the 3 million comes in. So as I write it here, mine is to come on the suspense account. This is debit. This is also credit. You get it. So mine is to come on the suspense account and also record that transaction. But before we record anything in the suspense account, we have to take into consideration the balance brought down. We have to take into consideration the balance brought down. Now, from our question, you get to realize that our balance brought down for the suspense account was provided. It was provided in the opening statement, but was also provided when it came to the statement of financial position. So this is our value. And this value I've indicated is on the debit side. It's on the debit side because when you look at the statement of financial position, they have included it under assets. And actually, that is the key reason why they have provided you with the statement of financial position so that you know where the suspense account is. Now, somebody will ask themselves, how come these people have gone ahead to prepare even the suspense, to prepare a statement of financial position before correcting the errors? Now, some organizations correct the errors at the level of the trial balance. Some because some errors cannot be corrected, maybe cannot be found out as early as possible, and maybe these accounts need to be submitted, so maybe to the to auditors or need to be submitted to the shareholders. They may go ahead to prepare other sets of financial statements. So I'll record here my balance brought down my balance brought down in my suspense account. The balance brought down in my suspense account is 40,150. So that is the value. And the reason why we drop the suspense account is because we want to clear it. So this is 3 million. I'll come to the credit side. I'll come to the credit side since we are crediting our suspense account, and I'll record purchases. I'll record purchases. Now, in most cases, these questions don't have dates. So we don't have dates in these accounts. Just write the detail and then the amount. And this value is 3 million. This value is 3 million. Yeah, like that. So that is what will happen with our first part of the question. So in case you have any question, you can use the chat box or the comment section, and you shall be able to answer that to you. So I'm now going to the second part of this. The second part of this. So our second part of the question is saying extension to the building that cost 65 million was recorded as a repairs expenses. Buildings are depreciated at 2% on cost per annum. Now, this part itself is indicating to you two things. Now, this error is an error of principle, just like the way I gave you an example of a motor vehicle that was recorded as purchases. If it's an extension to the building, we usually call this in a financial accounting, we call this a revenue. We call this a capital expenditure. Now, a capital expenditure is one that increases the capacity of the building, while a revenue expenditure is one that just improves the build. It could be the building or could be motor vehicle. So if, for example, this building we're just doing a painting and maybe trying to sort out just maybe a wall that has an issue and there's no basically any improvement in the capacity of the building, then we would go ahead to record that as under repairs. But since this time they're telling us it's an extension to the building, it means that either an extra room was added or an extra level was added, whatever it is. So it would not really follow under our repairs and expenses. So this was an error of principle. So we are going to correct the error. Now, since they are saying that this value was recorded in the repairs expense, one of the first things that we are going to do is to remove this 65,560,000 from the repairs expense account. From the repair expense account and take it to what? And take it to the building account. And take it to the building account. And when you see, even when you go up here, there's already a buildings account here. So we are going to increase the buildings value here. Now, that will be one. Now, this error in itself, you have to know that this error will not affect the trial balance. The error will not affect the trial balance because the repairs expense account has a debit balance, which the same thing the building also has. So ideally, it does not affect our trial balance as well. It's an error of principle, and errors of principle, like I've indicated in the summary I gave you earlier on, they don't affect the trial balance. So in correcting the error, that's what we are going to do. Remove it from the expense account by crediting the repair expenses account, and we shall debit the buildings account. Now, when it comes to the depreciation they are giving us, now the fact that we recorded it under the repair expenses account, it means that we also did depreciate it because it was not part of our asset balance at the end of the year that was due for depreciation. So we are going to recognize depreciation of 2% on cost per annum. So 2% of this 65 was not depreciated. That is why they have given us this value. So I'll take this value, other side. So when we come here, part 2 of the question. So what I'm saying is I'm going to debit my building account. And I'm going to credit my repairs expense account, repair expense account, with how much? With that value. I'm debiting because I'm recognizing the building component, as well as crediting this because repairs expenses have a normal debit balance. So it means that there is a value of 65 on the debit side in the repairs account, which I'm basically removing by crediting. Now, the balance of 65,560,000, okay, this is the value. Now I want to just calculate the depreciation. I want to calculate my depreciation. Now, by what they have given us, this is straight line depreciation because they're telling us that depreciation is at 2% on cost. If depreciation is on cost, then that is that is straight line depreciation. So once I do 65 times that, I would come to 1,311,200. So I come here and I'll not even put this because it's still part of the part of my part 2 question. So now here we are going to do the recognition of depreciation. And you know that when we are recognizing depreciation, we basically debit depreciation account and we credit accumulated depreciation. Now this depreciation was omitted. So here we have two errors. We have an error of omission of the depreciation that relates to this asset, but we also have the extension of the asset that was not taken into consideration. So accumulated depreciation, the accumulated depreciation of how much of that? Because 2% of 65 gave us that. So we shall debit our depreciation, which is an expense, and then we shall credit. Yeah. So that is what is happening with our question. So we now move to the next part, which is saying that a cash receipt of 500,000, a cash receipt of 500,000 from a debtor was credited to the cash book. A cash receipt of 500,000 from a debtor was credited to the cash book. Now yours is to first think through a cash receipt. Cash receipts from customers are not supposed to be credited to the cash book. Things that are credited to the cash book are only payments. Now, if they are saying that a cash receipt was credited to the cash book, that is a first error that they made. You get it? So your first correction of the error is to remove this 500,000 that is sitting on the credit side of the cash book. And they are saying it was put there as 50,000. So 50,000 has to first leave the credit side. First thing first, even before you look at other things. And then they are saying it was debited to the debtor's account as how much? As 5 million. Now, if debtors are paying us, because a customer, a debtor was, in this case, was paying us. If a debtor is paying us, debtors have a normal debit balance. If debtors are paying us, we are supposed to credit them. So we went ahead and credited. We went ahead and debited instead of crediting. So we did the opposite. It's an interchange, kind of what was supposed to credit, we debited it. You get it? Yeah. So somebody would ask, how can somebody make such an error? These errors are made by human beings. This person may not be an accountant. So they really don't understand. So you're going to see what I'm going to do here. So what I'm going to first do is, because they are saying, I'm going to start with the first one. A cash receipt of 500,000 from a debtor was credited to the cash book as 50,000. That is the first error that was made. We're not supposed to credit our cash book. The error was a wrong side with the wrong amount. So what I'm going to do is I'm going to, since it was credited to the cash book as 50,000, I'm going to first debit my cash book. So my cash book, which is my cash account, I'm going to first debit it with 50,000. I'm debiting it with 50,000 because I want to write off the 50,000 that was put on the credit side. So I'm putting it on the debit side so that it matches off. You get it. But it does not end on only writing off the 50,000 that was put on the credit side, but I should recognize the value in the right way. So if it's a cash receipt of 500,000 from a debtor, it is supposed to be debited to the cash account. So still I have a cash account that I'm going to debit with 500,000. You get it. So I'm going to debit my cash with 50,000 and again debit it with an extra 500,000. Why? Because the 500,000 is the true recognition of the cash that is actually coming in. You get it. So that is very, very important for us to take note. Now, I'm going to explain more even as we proceed. So as we proceed, they have also told us that it was debited to the debtor's account as 5 million. It was debited to the debtor's account as 5 million. Now, we are saying that it was not supposed to be debited to the debtor's account because this was a payment that was rather supposed to be credited. So if I have my debtor's account, I'm going first do this. I'm going to get my debtor's account and I'm going to, since they are saying the amount was debited to the debtor's account, I'm going to first credit my debtor's account with how much? With 5 million. A reason why I'm crediting my debtor's account is because I'm removing this 5 million from the debit side. So I have to write it off by crediting the debtor's account by the 5 million. So that is the first thing. But it does not only end there, because me crediting my debtor's account with 5 million only balances it to 0. So I have to go ahead to again do more credit of the right value. So I'll credit the debtor's account. I'll credit the debtor's account with the right value that these guys were paying. Debtor's account with the 500,000. You get it. So you can see that there were there are actually two errors. I want just to would go back. I'll just show you here. Now, as you can see, we have taken into consideration, we've corrected this error. We've recognized the cash receipt in the right way by debiting our cash book with the 500. We also removed this 50,000 from the credit side of the cash book by doing what? By debiting our cash book. Now we did the same thing with the debtor's account. What we did, we have credited it by 5 million to remove this 5 million, which is not supposed to be there. We've also gone ahead to recognize the 500,000 as it's supposed to be. Now, the next step that we should follow through is to recognize the suspense value. And how we recognize the suspense value is by getting the difference between this side and this side. Now, before I do that, a bright student who would easily pick this up may go ahead to just have this as 500 50 instead of having two things here. So this bright student can have something like 550 there, and they can also have this as 5.5, but I just demonstrated it in detail for you to understand. So somebody can have the two accounts like this and maybe just use the other in their working. So once you have this and this, it means that the other error is the errors that affected the trial balance, are errors that brought the difference between the debit and the credit. You get it? Which in this case, is the difference between this and this, which in this case is the difference between that and that. Yeah. So in this case here, our suspense account would have the 4,950,000 of that value. You get it, huh? Yeah. So it's important for you to
network.
I request that we mute our microphones, those that are following this on Zoom, so we don't disrupt the class. In case you proceed, Taeva Peter, I'll move you out of the class. Don't unmute your microphone unless you have something to say. Thank you. So that is how that will be. So you can see I concentrated on looking out for the errors and then the remaining difference between, because at the end of the day, this is a double entry. The debits have to match the credit. So if I have a deficiency after I've corrected the errors, that deficiency must be as a result of suspense, which I've gone ahead to recognize. Yeah, when you practice these things over and over time, you master them. Even myself, I also didn't begin at a higher level, but you understand them. And you know, when you also understand financial accounting, it's much easier for you to correct some of these errors because you understand the principles that should really take place. You understand? So the next transaction is saying that Power Supplies Limited had an outstanding balance of 4 million that was paid twice using electronic funds transfer. The company refunded the overpayment. Prompt Supplies Limited had an outstanding balance of 4 million. Taeva Peter, this is the last warning. I'll be pushing you out of the class, unfortunately. Prompt Supplies Limited had an outstanding balance of 4 million that was paid twice using electronic funds transfer EFT system. The company refunded the overpayment. So we basically paid twice to Prompt Supplies, and we paid twice by an excess of how much? Of 4 million, because their balance was 4 million. So when the question says we paid twice, it means that we did what? We they refunded the overpayment. Now, in this case, since they refunded the payment, ours is to, of course, since they're saying Prompt Supplies Limited had an outstanding balance of that was paid twice using, because that was the error, the company refunded the overpayment. So we'd go ahead to actually recognize that overpayment that was actually made. You get it? Yeah. So how do we recognize that? How would we recognize that? Can somebody give an idea of how that would be recognized? somebody in the chat box. We are learning together, so you should be able to participate. In case you're watching this from somewhere else, please drop your what you think. You know, the best way to revise, especially for CPA, is to not only to go through solutions, but to first think and see, if this was an exam, what would I have done exactly? You get it? So it's important for you to think through some of these things and see what exactly would have happened. You get it, huh? So for question 4, for you just to understand now, in this case, your question should be, what kind of error was actually made in this case? Because they're saying Prompt Supplies Limited had an outstanding balance of 4 million that was paid twice using electronic funding. That was the error. But then they're also telling us that the company refunded the overpayment. Now, this is a bit, they're not telling us on whether actually the overpayment was recorded or not recorded. The question is a bit silent on that. So ideally, what would take here is, since the company refunded the overpayment, then would, and they have not told us on whether this was recorded or not recorded, we may consider this as a no error. We may consider this as a no error because the company that was overpaid actually did refund the payment. So there is no error in this case. So I hope you get to understand that. So it's important for you to read through the question and understand and think through and see, is there an error? Because at the end of the error was able to be detected earlier on, and the company refunded the overpayment. Yeah. So what you basically do is for item 4, you can just say no error. You can just say there was no error, or error was rectified through what? Through by the other company making the overpayment, refunding. Yeah. So no error to be corrected here. So I'll move to the next part. I'll move to the next part, which says that the depreciation of of computers 1.3 was entered in the statement of profit as 3.1. The correct amount were entered in the corresponding accounts. The depreciation of computers worth 1.3 was entered in the statement of P&L as how much? As 3.1. The correct amount should have been, the correct amount was entered in the corresponding account. Now, if we have depreciation is an expense. And if it is entered into the P&L, the statement of profit and loss, it is basically it's like a debit. If you've seen how a P&L looks like in a T account, it's like a debit. So ours is first to, this is of course, this is an arithmetic error. So we have 1.3, and then they entered as 3.1. So the difference between the 1.3 and 3.1, just to press here on the calculator, 1.3 and 3.1, this gives you about 1.8. gives you about 1.8. I hope you get the same there. Yes, gives us 1.8. Now, depreciation is a debit in the P&L. Depreciation is a debit in the P&L. Now, if they are saying that we made an error by taking 3.1, it means that we can only rectify this error by rather doing what? We shall go ahead to credit our P&L with that difference. We shall credit our P&L with that difference. And then the other difference, since it's an arithmetic error and it's an error that affects our trial balance, would go ahead to bring in the suspense. Yeah, for those that joined it a bit late, I earlier said that errors that affect the trial balance are corrected by a suspense. In this case, this is an arithmetic error. Now, earlier on, I gave you here a description of depreciation. Now, depreciation, when you're recognizing depreciation, we are saying that we debit the depreciation account. We debit the depreciation account. Now, as you advance with accounting, you'll get to realize that debiting depreciation is the same thing as debiting your profit or loss account. So some people will just say debit profit or loss account instead of debiting depreciation. And then we credit our accumulated depreciation, which other people can call provision for depreciation. So in this case, they are telling you that instead of putting 1.3 here, they rather did what? They put 3.1. And then they are telling us that the correct amount was entered here. So they actually did the right amount here. So this ideally would cause a difference between what we have, even what we have within our books. So what we are saying is that to correct this, since the excess, we put more excess on the credit, on the debit side of our P&L, it means that we have to remove it. So since it's a debit, it's a debit balance here in the P&L, it's supposed to be on the debit side, we will go ahead to credit our P&L with the 1.8. Now, if our P&L has a 3.1 on the debit side, and we go ahead and credit it by 1.8, it means that it will remain with 1.3. I think you know how accounts work when you're balancing off accounts. It will remain with 1.3. So that is why we go ahead to correct this error. To correct this error, our error number 5, we shall, our error number 5, we are saying that we are going ahead to credit our P&L, shall credit our P&L. And the reason why we are bringing things like P&L here is because even the question, they indicated that they went ahead to prepare the financial statements. So definitely in the P&L, you definitely find a suspense account somewhere, somehow. So P&L, we are going to credit P&L, our P&L account, which is our statement of P&L, with how much? With the value, which is 1.8. And we are crediting, sorry. And then we shall debit our suspense account, since this is an error that affects the trial balance. Shall credit our suspense account with 1.8. Okay. So we go to our next part. Our next part that says a check of 5.6, a check of 5.6 received from a debtor was debited to the bank account. A check of 5.6 received from a debtor was debited to the bank account and credited to the sales account. Now, when a debtor pays us money, when a debtor pays us money and pays us through bank by check, we are definitely supposed to debit our bank account because money is actually coming through. But if this person is already at data level, it means that we already recognized the sales. Again, when they are paying us, we shouldn't go ahead to affect our sales account. We shouldn't, because when we are selling, remember, a debtor comes into shape when we sell on credit. So when we sell on credit, we go ahead to, we debit our debtors account or accounts receivable and credit the sales account. So we recognize the sales at the point of sale, not at the point of payment. So the 5.6 being received from the debtor and debited to the bank account was done right. That is very right. But where the error is us crediting our sales account, because the sales account is not supposed to be credited at this level, because we already credited it when we are recognizing the sale to this. Rather, what we should credit here is the debtor's account. We should debit the credit, we should affect our debtor's account by crediting it, because we have to write off the amount that we recorded in the debtor's account. So what we are going to do in correcting this error, we are going to remove this amount that was credited to the sales account by debiting it. We shall debit our sales account to remove this 5.6 that was credited on it, because it's not supposed to be there. And then we shall credit our debtor's account, because it is the debtor who is paying. So when the debtor pays us, we should go ahead in the debtor's account and make an adjustment. So in my debtor's account here, this is this is a question 6, I think so. My question 6. So we have, since we are removing it from the sales account was credited with 5.6. So we are going to remove that 5.6 from the sales account by debiting it, because it was credited. And we are going to credit our debtors account with the same value. With the same value. So that is what is going to happen. So we'll move to the next part. You know, you could be there saying that these things, I think I may not do these errors, because you're making your mind to not to understand them. But these errors can also be brought in question 1, objectives. And imagine you getting out of the exam and you receive your results and you have a 48 or 49. Yet you could have understood how to correct some of these errors. Not every error is complicated. Some of them are very easy for you to basically do what? pick up and be able to correct the error, and you can get some marks. You get it, huh? Yeah, so there is nothing that this topic let me leave it out, because at the end of the day, you need these marks. You need, even if they are getting 2 or 3 marks, they are valuable to you as an individual. You might even be stuck, that you may think that since you have options to choose questions, you get to a paper and the other question they have brought, you can't do it. There's one time, you know, some people usually ignore one of the topics, cash flow statements. Now you get to an exam and you've never looked at the cash flow statement, you even don't know where to start from. And then they have also brought errors. And you have to choose one of the questions, because you only have one question to leave out. So at the end of the day, you need to understand some of these things in and out, because you don't want to give any chances to your passing or failing. You get it, huh? Yeah, so very important for us to understand. And when you do many questions of these, you get over and over time, you get used to them, because these questions, they keep repeating them. And these errors are the same. The examiner will just try to change the name or twist it a little, but it's the same principle. So when you try out maybe like 5 questions for past paper questions, then you will master the trick. It's about tricks, by the way. So our next part is saying that no entry has been made in the books of accounts for bank charges worthy 67 debited on the bank statement. Now, when they say debited on the bank statement, it means the bank debited in the bank statement. But for us, we didn't do anything on our bank statement. Now, this is an error of omission. So we are going to recognize our bank charges. So since they were debited on our bank statement, definitely they affect bank, and then we shall have bank charges there. So when I come here, my 7, I'll debit bank charges by how much? By the value of 67,000. And then credit. Bank charges are expenses, and expenses have a normal debit balance, so that is why we are debiting them. And then I'm going to credit my bank, because my bank is reducing. My bank reduces in my books. You get it, huh? So I have my bank account and then bank charges account. Now somebody might want to ask that, how come the question is saying that they were debited with the bank statement? Now the bank itself will definitely debit it on your bank statement. These are transactions in the bank, not in your books. To you, when you have a bank charge, you have to credit it on your bank, in your bank account, in your books, because it reduces on what you have on the bank. The reason why the bank is debiting it is, you know, for you, all the money that you have in the bank is the liability to the bank. So every time they charge you bank charges, it means they are reducing on your liability. They are deducting from your account. So when liabilities are decreasing, we said we debit. So that's why they are debiting, because you're liability to them and you're reducing in this case. So that is what happens why you're seeing this word debit coming in here. So I hope you get to understand that. So that is how we reflect that. Now we move to the next question. We move to the next question that is saying share capital 40 this was brought forward in error as how much? As 450.4. Share capital of 40 that was brought in error as what? So this is an error of transposition. This is an error of transposition. And errors of transposition also are errors that affect the trial balance. There are also errors that affect the trial balance. Transposition would be like that, something like that. So that error also affects the trial balance if it's made, and it's also corrected by a suspense account. So you know very well that share capital has a what? Share capital has a normal credit balance. Share capital has a normal credit balance because share capital is equity. So if they are telling us that share capital worth that this amount was brought forward as this, it means that we took a value that was higher. So, and this value was higher by the difference between this value and this value. You get it, huh? So yours is to first calculate and see what is the difference between the two values that we have there. What is the difference between the two values that we have there? Okay. So 450.4 minus 405.4 gives us 45. So the difference is 45 million. So it means that since we recognize a high figure than a lower figure, we have to debit our share capital, because we want to reduce our share capital value, because it's supposed to be this, not this. And when equity is reducing, we debit it. So we are going to debit our share capital with the 45 million. With the 45 million. Okay, thank you, Angela. Going to with the 45 million. So 8 here. Share capital, debiting it with 45 million. And then, since this error is an error of transposition, and it is an error that affects the trial balance, automatically the other alternative account is a suspense account of the same value. Just put account on this as well. So the other alternative account will also be 45 million on the suspense account, like that. You get it, eh? I stopped entering things in the suspense account. We shall just enter them shortly after completing here. And we shall see if our suspense account is able to balance off. You know, when you, as an accountant, when you're correcting errors, you can actually also make errors in there. Error in an error. You get it, huh? So we are humans. We are not machines. Okay, second last, they are saying that a credit note received from a supplier, of shillings 1.1 had only been posted in the supplier's account. A credit note from a supplier 1.1 had only been posted correctly in the supplier's account. No corresponding entry had been made. Now, credit notes, I think you've heard about credit notes, and you've also heard about debit notes. Now, credit notes are documents that are sent by suppliers to customers to correct an overcharge. So when a supplier, maybe for example, gives you goods, maybe of a given value, and you return some of them, then they will give you a credit note to reduce the earlier invoice that they had given you. You get it. The same thing would happen with a debit note. A debit note means an undercharge. Maybe the supplier had supplied you some goods and then you asked for more goods. Then there they'll send you a debit note. Now, in this case, once you receive a debit note, definitely the accounts that are involved is the suspense account. It is the supplier's account. The supplier's account, because it is the supplier is sending a credit note reduced on what your balance is with them. So we have the supplier's account, and this question is telling us that the supplier account was actually, they are telling us that the supplier account was correctly posted, but no corresponding entry had been made. Now yours should be, what could be the corresponding account? Now, every time we receive a credit note, it means that we have some returns. Like I said, it comes to correct an overcharge. So as we correct our supplier's account, we should also make sure that we are posting this in our returns. Which returns? We have return inwards and return outwards. Now, in this case, this will be return outwards because it is us returning to the supplier. So we shall have our return outwards. So the account we have here is our return outwards that we are going to change. Now, remember the credit note, what the credit note does? The credit note, once we have the credit note, we are saying we have the supplier account. We have the supplier account. We have the supplier account. And also, we also have the return account, return outward account. Now, if the supplier is sending us a credit note, it means that, suppliers are creditors. Suppliers are creditors, for you to understand. And suppliers have a normal credit balance because they demand us. So when they send us a credit note, we have to debit their account. We have to debit their account, and then we credit the return outwards account. We debit their account because we want to reduce on their balance, and when liabilities are decreasing, we debit them. So when you come here, because they said they did the right thing in the supplier's account, so what we are going to do is we are going to credit our return outwards. This is our part 9. So we shall credit our return outwards account by how much? By the same value they have given us, which is 1.1 million. 1.1. And we are going to debit. Which account are we going to debit? We are going to debit a suspense account. Why we are going to debit a suspense account is because this error affects the trial balance. This error affects the trial balance and is corrected by the suspense account. Why it affects the trial balance? Any error that you see where they're telling you that things were done rightly in the other account. It's like a single entry account. It's a single entry error. It means that we have to bring in a suspense account. So the alternative account that we shall work with is the suspense account. So it's good for us to have that in mind. So that is error number 9. Now, lastly, they're giving us 10. They're saying the loss for the year ended is that. Now, this is not an error. It is basically for information purposes. It's basically for information purposes. Sorry, I've left the question. I'd moved it down somehow. It's my question 3 right here. So we've done the correction of the errors the 10 marks. There was a suspense account here. We can just try to go back to our suspense and see how we can try to get those 2 marks as well. I'll try to delete this to give me some space. Okay, so I had recorded the balance brought down. I'd also recorded the second, I think this didn't have a suspense. I think the first transaction that had a suspense, okay, was this. So the next one that had a suspense in it was this 4,950,000, which we were actually doing what? We were we debited our suspense. So what I'll do, I'll come to my suspense here and debit. I'll call this debtors, and this value is 4,950,000. Hope that is the case. Yeah, 4,950,000 is on the debit side, as indicated there. Now proceed. There was a 1.8, and this was on error number 5, and it was also on the debit side. So I'll go to my suspense account. I'll go to my suspense account and write P&L, and write it was 1.8. 1.8. Then when I move 1.8 to 1.8, I have something on share capital here. I have something on share capital here where I credited my share capital with 45 million. Okay, I credited my suspense account with 45 million. So I'll come on the credit side of my suspense account and say share capital. I'll say share capital. I'll say 45 million, like that. And then, is there any other? Yes, this one I think I had not finished it. As I was crediting my return inwards, this was also supposed to be suspense account for me to finish the transaction, like I've explained earlier on. So I also have something on the debit side. I have something on the debit side that relates to suspense. So I'll go to my account, suspense account. This is returns. You see, I usually use the alternative account name here. Return outwards. This is 1.1. Okay, so mine is to add up the 2 sides. They should balance. So when I add that and also add up that, it should be able to balance. As you can see there, it should be able to balance. Yeah. So that's how my suspense account is looking. That is how this is also looking. I just want to see what the other part of the question was asking for us to know. Now, the other part of the question was asking us to prepare a corrected statement of financial position as at 30th June 2020. And how many marks they are giving it? They are giving it 8 marks. They are giving it 8 marks. So what is going to happen is what I'll do, I want to best to do here. Okay, I'll assume you're in an exam. So you can use the same format as the way they have drawn it, because this is how they gave you the statement of financial position. So you may use the same, of course, a similar format, just like the way they have brought it here. But once you come to your to your question here, what is the name of this company? This company was called Excel Limited. This company was called Excel Limited. So Excel Limited is, don't forget these titles, they are very important. Statement, can call it corrected statement of financial position. As at statement of financial position as at 30th June. You know, when it comes to a statement of financial position, we say as at. Then for statement of comprehensive income, we say for the period. Yeah. So we shall use the same format, just like the way they have. Okay, maybe yeah, same format, or you can actually use your own format. So okay, for them, they started with actually the current assets. So we can say assets. And under assets here, we have current assets. We have current assets that they have given us. We have current assets that they have given us. Now, we have inventory. They actually even didn't arrange them. So for us, we're actually going to arrange them. Because they gave us inventory, then they went to plant and equipment and buildings, then cash and bank. So they mix them up. So what I'm going to do, I'm going to start with my current assets. I'm going to start with inventory. I'm going to start with inventory. Now, inventory didn't have any change in it. Inventory has not gotten any change. There was no error that affected it. You get it, huh? So maybe I'll have my amounts here. And I'll put a degree of precision of 1,000 there. Then maybe I'll have my inventory value of that much. Inventory has not been affected, so even in the corrected statement of financial position, it will have the same value. You get it, huh? So it's very important for you to have that in mind. Now, the other that I'll be looking at is my now cash and bank. Now cash and bank has some changes onto it. Cash and bank has some changes onto it. Cash and bank. So anything that has cash and bank on it, we are going to affect it. So you can try to do working. You can have your working, maybe working 1. So if it is cash, I'm going to have my balance brought down. Okay. Maybe I have my balance brought down from the statement of financial position. So what I've been given is 5,4. That I have what I've been given. Just a moment, just to show you. So I've tried to pick the value that is as per what they have given me in our question. So this is what we have. The 500 is what we have before any kind of change. So that is what I've tried to right there. Now I'll come to my errors here and see anywhere where there's cash. So where there's cash, so there was a debit on cash of 550. So I'm going to, and this was to do with debtors. So I'm going to add this. I'm going to add, it's 550 that is being debited on the cash account. So I'm going to add it here. It's an addition. Then I'll also look and see if there's any other cash in these errors that was, now I have bank charges. I have bank charges of how much? Of 67. Now, these are the things that are going to give you marks on this question, because some of the other things, you're just going to copy them and paste. But these bank charges are coming in as a credit because they reduced my cash. So you have to do these workings. You don't have to press your calculator directly. You have to do the working. So once you try to add all this, was there any other cash that we've left out? I've tried to remove the 67,000. I've gone ahead to also recognize the debtors. Now my balance brought down was 54,500. But this is just for you to note, for you not to forget, these were 1,000s, so that we don't. So these were 1,000s. This 550. Remember, this is absolute 550 in itself. Then this was 67,000. So at the end of the day, what we have is this 54,983. The 54,983 that we shall recognize in our corrected statement of financial position. So you come here, this is 54,983. 54,983, like that. Let's try to make sure. Yeah, I'm writing this because I already have a degree of precision of that value. So I've already written my cash and bank, and you can go ahead to add working one to direct to the examiner. So we also have land, but land is not part of, we are still on the assets. So we have trade receivables. We have trade receivables of 9,850. We have trade receivables of 9,850. So when I go to my question here, I'll write trade receivables. Trade receivables. Trade receivables. Now, the first value, what I have is from the other, but my question is there anything that affects this? So I'm going to, I'm also going to have my working too, because there is something that affects my trade receivables in the errors. So working too, these are trade receivables. Trade receivables are also debtors, for you to basically know that. So anything that is to do with debtors would definitely affect. So I have my balance brought down from the before correction of errors is that. Let me add the zeros so we don't forget. 95,850,000. Then I'll go to my errors that I've corrected and see if I have trade receivables somewhere. Yes, I have trade receivables of 5.5, but this time this was being credited. This was being credited. So when I'm trying to make the adjustment, it means I'm going to credit it. So I'm going to come here and I'm going to less, of course I'm lessing debtors, worth 5.5. Yeah, I'm lessing them because if it's on the credit side, it must be less because debtors have a normal debit balance. So anything on the credit side is lessing the debtors. Then I'll move down and see if there's any other. There's something to do with sales here of 5.6. And this one is also being credited as well. So I also have debtors of 5.6. Of 5.6. I'll have debtors of 5.6 like that. So when I have my 5.6 there, mine is to look around and see if I have any other debtors. I don't have any other debtors here. So what I'll do is, if that is all with the debtors, I'll try to add you now for you use your calculator and see what you get. So you get 84,750. So that will be your debtors value. So when you come to your debtors here, you come and write that value 84,750. 84,750 like that. So those are your current assets. Ours is to check and see, do we have any other current assets that needs to be recorded before we get to the fixed assets or the non-current assets. So we had receivables, we had inventory, cash and bank. Now you could have a new current asset that has come up because of maybe a new an error that you made. So you have to, somebody said, do we less every time an entry is in the opposite side of its normal? Yes, of its normal balance. Yeah, that is the right way to put it, of a right normal balance. So it's good for you to look at your errors and see if there's any kind of error that brought into existence a new asset, a new current asset, which ideally I really don't see here. There is no new current asset that is there. So I would regard this as my what? As my only assets, current assets. So you can be good to the examiner and say total current assets, and get the value. And get the value like that. Then we can go to our non-current assets. Non-current assets. Now, yours is to go back to now the question and see. Someone says, what happens to the figure of suspense if it's under non-current asset? Now, the reason why we've not tapped onto this figure of non-current of suspense is because we've just corrected our suspense and our suspense has been able to balance to zero. So suspense no longer has any balance because we've balanced it to zero. It had a balance brought down of 4150, and whatever we've put it in here has made it balance. So we don't have any balance brought down or balance carried down. So we've written it off. And that is why we no longer have to include it under our assets, because the reason why we've corrected the errors is to do away with the suspense account, which we've just done. So that is why that is happening. So it's good for us to take note of that. So we come to our non-current assets. We have plant and equipment. We have plant and equipment. We have plant and equipment. Now ours is to find out and see, is there any of our errors here that affected the plant and equipment? That affected plant and equipment. Now, we had something to do with building, but remember we have a building account on its own. So we don't have anything that affected our plant and equipment. So our plant and equipment will be as it is. Plant and equipment will be as the value as it is. 236,560. That is how the value will be, because there was nothing to change. Now we move to see what else do we have under our assets. Now, when you look at the question very well, we have land, and then we have building. We have land and building. So let's start with building. Let's start with building. So building. Now, building, when you look at the question, building has a value that they have given us, which is how much? 324,000. Now, when you come to here, I'll add another working. Now, this is where another marks will be coming from also. You know, if you just put the value the other side, it's definite, they will only mark you the one mark, but when you do working here, the examiner will be giving you some marks here. So buildings balance brought down from the statement of financial position they have given us is how much? Is 324 that, and I'll add 3 zeros just to make sure that we are at par. 324,000. Yes, as like that. So mine is to go back into my errors and see, is there anything that affects my building? Definitely. I have a new building of 65, that value. So I'll come here and put extension. I'll put extension of how much? Of, extension of 65, 560. 65, 560. 65, 560. Like that. So that is what I have as my addition to the building. It's a positive. Now, for you to note, when you look at the question, very well, they have drawn up this, and these values of these assets are net values, are net book values. Now, why am I calling them net book values? If they bring you a question and they have not given you provision for depreciation, and of course, even when we are drawing up this kind of format, you don't see any provision for depreciation. These values are net values. And every time also when you look at any balance sheet, any values that you see in a balance sheet are net book values. So it means that if you have any depreciation, for example, like we have a depreciation that was not taken into consideration, we have to remove it because we have to recognize only the net book value. So it means that here in our working, we have to come and recognize this depreciation of 1.31 and remove it so that we get the net book value of our asset in net. So depreciation is 1311200. 1311200, like that. But this case is going to be a negative because it's reducing our value of the asset. So when you add all this, you get to 388,248. 388,248. That is the value that you come to. Now, we are drawing up our, we are here. Just a moment. So in our buildings, we come and put the same value as it is there. So since we have a degree of precision, I'll remove the 3 zeros Now, since this has 2 zeros, I'll just put a 0.8 here. Yeah. If you want to see it very well, you can just increase there. So that's our buildings, and I'll put here, this is working. It's good for you to note, so you're directing the examiner. This is working 3. Working 3. What else? This was also working 2. Working 2. This was working 1. I say these are where the marks will be, especially when you're doing a corrected statement of financial position or anything. It will be on those things that are going to change. So is there any assets? So this we recorded, buildings we recorded. Do we have any other assets here? Land. And our question is, did land change? Did land change? Was there any issue to do with land? Was there any issue to do with land? Definitely, we don't have any issue to do with land. In our errors, there was not any error that had land in it. So land would remain with its value. Land would remain with its value as it is provided to us in the question. So it is 304. It is 304,850. So those are the assets we have. We can get the total non-current assets. Total non-current assets. These are also fixed assets for you if you don't know. Like that. Okay. So you can get your total assets. Total assets before you proceed to liabilities and so on. Total assets of this value giving you 1,147,932. So then we come to our liabilities, equity and liabilities, equity and liabilities, equity and liabilities. So we have, we can start with equity. Equity. Okay. Equity, and under equity, we of course we have shares, share capital. We have share capital. Now, share capital had a change onto it, so this will also be another working that will bring you marks. Sorry. So share capital. Balance brought down. Balance brought down. Now, balance brought down for share capital in the question as provided, for you just to know, is that they have given us share capital to the tune of 450, 400. 450, 400. 450, 400. So that is our share capital. Add the 3 zeros for our working. So we had something in the errors here, which was debiting our share capital. So I'm going to remove this. This is an error that has to be deducted in computation, an error in brought forward. It was how much? It was 45 million. 45 million. and this is going to be a negative because it's reducing what I have. Sorry. Sum this up. So it gets us to that value they actually gave us in the errors. Remember when they are giving us the question, when we are doing the errors, where they say that share capital was supposed to be this. So this is the true value of share capital. Now, during this time, there was no other change on share capital. There was no other share capital that was issued. So we shall ideally remain with the same value of share capital. You get it, huh? Yeah, so when I come to my equity here, I'll just put share capital and put that value. So it is 45 that I'll come here. Share capital. Okay. Now remove 3 zeros, 1, 2, 3, like that. So that's the value that I'll have for my share capital. Adjusted very well. Now under equity, it's not only share capital that we have, we also have share premium that they have given us. Share premium is also part of equity. So share premium, I also have to record share premium under my equity. Share premium under my equity is that. For it, there is no change. Here, I'll just put working for, just so I don't forget. Yeah. So mine is to check again and see, do I have any other element that I should put under my what? Under my equity. Yes, we have what we call retained profits. We have retained profits. Now, retained profits have some kind of adjustments onto them. And this is where most of the marks will be. Retained profits. I'll write retained profits here. Now, retained profits also has to be working on its own. Sorry, this is working. This is working. Is it working 5? If I'm not mistaken. I think this was working 4. So working 5, these are my retained profits. So I have my retained profits as that, as balance brought down. Now, there was something that was given when it came to our question. I hope you saw the last note that was given, where they told us that the loss for their ended June 30th, June 2020 was 8,750. So this is the loss that they had recorded before the errors were made, or before the errors were corrected. You get it, huh? So what we are going to do in this working, we are actually going to do, you can call it corrected net profit or loss. We're going to do a small statement, which is our corrected net profit or loss. So we are going to have our loss as at 30th June, as provided in the question. It is of that value. It is 750. And since it is a loss, what I'll do, since it's a loss, what I'll do here is I'll put it as a negative. I'll first put it as a negative. Now, I'm going to go into my errors and see anything that affects the P and L. Because remember, the profit and loss comes from the P and L. So anything that affects the P and L, I'll go and affect it there. So the first thing is my purchases. And my purchases here, you see that I was debiting my purchases. So I was basically increasing my purchases. And yours should be, how do purchases affect my profit? Do they increase the profits or reduce the profits? Now, you know very well that when you're preparing your P and L, and you include purchases are part of your cost of sales. And if the purchases are high, it means that your cost of sale will be high, because cost of sale is purchases plus opening stock less closing stock. So if your purchases are high, it means that your cost of sales will be high, your gross profit will be low, because remember, your gross profit is sales less cost of sales, and your net profit will also be low. So in case we have an error that is bringing in more purchases of 3 million, it means that we have, when we're adjusting our net profit or loss, we have to less that, because it reduces us more. So our purchases will reduce us more by 3,000 based on the explanation I've just tried to give you, by 3 million. Now, when we go back, the next is ours. The next is purchase. The next is repairs. So we have repairs expenses or to the tune of 65 million. And in this case, this error is crediting our repairs. Now, when we credit, remember, repairs have a normal debit balance. So when it is credited, it is like it increases our profits. How? Because if at all it was debiting repairs expense here, it means our profits will begin reducing more. But since this time it is crediting, remember the 65 had been put in the repairs account, but it doesn't belong to our repairs account. So it could be even one of the reasons why we reported a loss instead of a profit. So what we are going to do when we come to our corrected profit or loss, we are going to add that 65. We are going to add the 65 because this time we are crediting our repairs. So I'll just pick that value and come here and say repairs. And I'll put my, okay. I didn't copy it very well. This is 65. Sorry. Okay, I can actually just do this, reference it. So I have the 65 there as a positive. Now I move to the next one to see if there's anything else that affects. Now the next one is depreciation. And in this case, the depreciation is increasing. So I'm going to remove it because it reduces my profits further. You get it, huh? It reduces my profits further. So depreciation can just try to reference this value here. Yes. Now for it, I'm going to put it as a negative. Why? Because it's an extra expense. Remember, for repairs, I put it as a positive because we're trying to reverse out the repairs that were recorded wrongly. You get it? So cash doesn't affect, suspense, Now we have something on item 5. We have this item that was this 1.8 was to do with, I think this was depreciation for computers that were recorded as 3.1 instead of 1.3, So what we do is we go ahead to correct that. So this was depreciation. This is also depreciation, or you can call it P&L, since that is what we recorded there. And this value is a 1.8. Now here, as you can see, we are crediting the P&L. Now P&L is like an income account. When we are crediting it, it is benefiting. So in this case, the 1.8 will be left as it is there. You get it, huh? The 1.8 will be left as it is there. Remember, this increases our profit, because ideally, the error that was made, they recorded a high expense, and it may be one of the reasons why we even went into a loss. So since we are correcting our profit or loss, we are adding it back. We are adding back the 1.8 that was in excess of the 3.1 that was deducted from our profits when we were recognizing the depreciation for the computer. So the next one is us trying to look at when you come to our errors here, we have the P&L, then we have bank charges. Bank charges also affect our profits because they pass through the P&L. So the bank charges are 67. Remember, they were also not recorded. So it means that they are not part of the calculated profit or loss. So the bank charges of 67,000. I'm going to list them because here these bank charges are reducing our profits. You get it, huh? Yeah. Now, ours is to again look through the errors and see if there is anything that affects us. Now, after bank charges, we had something on share capital. This one only affects the statement of financial position. We already take it to consideration now. The other is return outwards. Now, somebody will ask, how do return outwards affect us? Now, if you are preparing a profit and loss, you know very well that when you do sales, you have to less any returns, sales returns. Those could be returned inwards. The same thing also when you come to your cost of sales. When you come to purchases, in case you have any returns, these returns have to be deducted from the purchases. You get it? But our question was telling us that they hadn't recorded anything in the returns. The question was telling us that they hadn't recorded anything in the return. So there are new returns. Now, since these returns come to reduce purchases, and remember, purchases reduce our profits more. Now, if they are reducing our purchases, it means that they are cushioning us on the higher purchases that would have been reduced from our profits. So in this case, if returns in the return outwards are high, it means they will reduce on our purchases. And if reducing our purchases, it means we shall have a higher profit. Because remember, higher purchases, lower profits. So the return outwards, when I'm taking them into my corrected profit, I'm going to basically add them. I'm going to add them. They were 1.1. 1.1, like that. Okay. Yeah, before I proceed, I just let you know that this class is run every Tuesday. For those that just joined us today that have never been part of this class, and we're charging only 100,000 for you to attend all the classes. So make sure that you take chance of these classes and you don't miss. You get, so just pay that amount. And today we just made a class free, open to everyone, but in the next classes you not have this class free. So it's important for you to take note and at least make the payment of this amount. It's one of the cheapest classes that we have. We've made it as cheap as that, and you access all the all access to all the next trainings that we shall have about this revision. So our return outwards 1.1, as we've indicated it there, and we are putting it as a positive. So we are going to since there is no any other transaction, we are going to calculate our corrected net profit. You know, I can't tell if it's a profit or loss, so I'll just say profit or loss for now. So when I add up here, up there, I come to 50. I come to 55, 331, 200. 55, 331, 200. Yeah, I hope you guys that are watching this are also getting the same value. Make sure that as you follow this, you're at least writing down some of these things so that you don't, you have something that you can revise on. You get it, huh? Yeah. Let's just confirm that we've included everything from the errors, just for us to understand that we've included everything. Okay, we included purchases, we included the depreciation, we included the P&L. Did we include the sales? Because the sales also affect our P&L. Let me try to check and see if we included the sales. Okay, we didn't include the sales. So what we can do is we can include the sales here. So that's why I've left a gap there. So the sales also affect us. So if there was an error corrected on sales, it would also affect us. Now our question is the sales, the 5.6. If you have your sales being debited, it means that your sales are being reduced. Now, when your sales are being reduced, it means that even your profits are being reduced, because higher sales, higher profits. Higher sales, higher profits. So what would mean that the 5.6 here would actually reduce our profits. So I'm going to reduce another 5.6 here. 5.6, like that. That is why it's good for you to go and back and review your question to make sure that you've not left out anything at all. But remember, this one, I'm reducing it because it's a debit in this case. So I'm debiting my sales with 5.6, so it would also affect me here. You understand? So this is my, it's actually, it's a corrected net profit. It's a corrected net profit. The 49, 731, 200 is a corrected net profit. So why are we labeling all this? Is because the corrected net profit or the profit and loss for the given year affects our retained profits that we shall have in our books of accounts. So since we are trying to ready to calculate here, remember we've said that our retained profits, what we have in the balance sheet or statement of financial position is 567863. And remember, already this is after they have recognized the loss of what? Of 8750. So ours is to correct this retained profits. So what we are going to do is we are going to first reverse what they recognized. This is the recognized loss that they recognize at 30th June. So we are going to derecognize it. And what we are doing by derecognizing, since it was a loss and these are profits, we are going to add it back because it would ideally have reduced our retained profits. So we are going to add it back. Let me just try to add 3 zeros on this so I don't mess up. So I'm going to first add back the 8750. The 8750. So I'm first adding it back because this is not the right value that they deducted. So and then after that, I'll now recognize the corrected net profit, which I'm going to add. Reason why I'm adding it, this I'm adding it because I'm reversing out what they did. They deducted it because it was a loss. Now I'm adding it back to reinstate. Actually, I can even indicate to you something here. These are the retained profits before end of year, or the one they started with, or at the start of the year. At the start of the year, before they could recognize the retained this loss. So this is what they had. So once they recognized the 8750, it reduced it to 56 to this. So since we now have our corrected net profit that we've just gotten, which is 49,731, it's good for us to get our retained that we are going to take to the statement of financial position, which is this plus that, which is 115,244,200. So that is what we have. So those are our retained profits that we are going to bring here. So this is 200. I'm going to say 0.2. Okay. Loss is 87. Okay. Okay. Thank you. The loss, the retained loss, somebody has just corrected me. It has a 600. Just to take, let me just try to take the 600 there, like that. So this would just change. This is 115,244.8. This is 0.8 rather than 0.5. So thank you so much for indicating that. So yes. Okay, so that is what we have for now as our retained profits. You can maybe increase that so that that is taken note. So I hope the other figures are okay. The retained profits at the end of the year, definitely that. Then the corrected net profit was that. Then that and that, okay, gets us there. So after you've recorded your retained profits here, remember it's part of our premium. So let me just try to get it up here. It is part of our equity. Now, ours is to check and see, is there any other equity that we have? So when I come to my question here, do I have any other source of equity? Sorry. Equity. So I've recorded share capital. I've got the share premium. I've also recorded retained profits. So let me just now try to look at my liabilities, this and this. So we have a loan and trade payables. So what I'll do my total equity. I'll do my total equity. like that. So then I'll go to my liabilities. And then my liabilities, I remember I have, yes, you can also write them. You can write headings just so you are a smart student. So I have my trade payables. I'll start with, since I started the same thing with my assets, I'll start with trade payables. I'll start with my trade payables. Trade payables from the question is 45,756. Now our question is, were these trade payables, was there anything to do with trade payables that we have in the question? Now, when you check the question, when you check up in terms of the errors, we didn't have anything on trade payables, if I'm not to forget. We didn't have. So as the value as it is there is the way we also bring it here. So it is 45,756. 45,756 as it is there. Now, the other that we need to look at, of course, is the loan, the 10% loan. Now here, you can just say your total. The total that you have for this is 45 right there. Then your non-current liabilities. We have the 10%. We have the 10% loan. Our 10% loan from the question. Our 10% loan from the question is 43,4,301. 43,4,3,001. If I'm already giving up. Okay, we have it here like that. So this also doesn't have any other value. We have it there, the same value. Okay. So I'll say maybe total equity and liabilities. Now ours is to first check and see, have we left out anything? Have we left out anything when you look at our question? Now, good for us to check and see. Return outwards debtors that we took into consideration, suspense, building, purchases. Ours is to check and see, have we recorded everything as it should be? You get it? Now, when it came to just a moment for us to understand. Those that are following, have recorded everything, or there's anything that we've left out that you can try to pick up? Expenses missed out. Expenses missed out. I don't know which expenses we've missed out, but expenses, maybe you can clarify more. But the expenses, we've calculated them using what? Remember, expenses don't appear in the statement of financial position. We took into consideration the expenses when we were recording, when we were trying to do our statement of corrected net profit. Expenses payable. Okay, let's just try to go through here. We have expenses payable. Yes, Under our liabilities, thank you. Under our liabilities, we have expenses payable. We have expenses payable. I wasn't trying to click that. So expenses payable is 23,450. Expenses payable is 23,450. So that will change this total of this to that. You get it, huh? Is there anything else? Expenses payable. Thank you, everyone. Expenses payables were left out. I hope there is no any other that we've left out. I hope there is no any other that we've left out. I think it's actually that so, because when you add these values, they actually get to they actually give us the total that we have up. Just a moment. Yes, this is 1,147,932, and then this is also 1,147,932. You get it, huh? Yes. So thank you so much, everyone, and that is why it's good for us to go back into the question and see what exactly there. So thank you so much for following this. In case you want to be part of our normal classes, please make sure that you contact me after this and make that payment, and we should be able to follow through and continue with this. So thank you so much, and I wish you all the best in this.